Yeah, hi. For some of you who don't know, this is Prakash. I'm the founder of InvestMates. It's an digital wealth management platform to manage your holistic wealth across India and US and across your family members. This is an early stage wealth management startup on a platform helping NRIs to manage their finances and wealth globally. So we have partnered with RightTaxMate, who are here. We have Krishnan and Gangaraju from RightTaxMate. So RightTaxMate has been in the industry for more than a decade, and I'll let Gangaraju introduce. But what we are trying to do is ensure all NRIs are get educated on everything related to finance and managing their money and wealth. Right? When we talk about money and wealth, it includes taxation, it includes insurance, it includes investments, and everything else end to end. So we will be doing a series of session to help NRIs learn and be better at managing their money. So part of the series is we did earlier one financial planning session a few months ago. So this is a second webinar session. We will today talk about taxation strategies, to save money or be compliant on both IRS and Indian compliance. So I will let Gangaraju take it over from here. Maybe in the end, we can once again talk about wealth management and some of your challenges. With that, I'll hand it over to Gangaraju.
Prakash, am I audible?
Yes, you are.
Okay, thank you, Prakash. Am I audible? Can you hear me okay?
Yes, you are. Yes, you are.
Okay, sure. Thank you. Thank you, everyone, for joining us this educational webinar.
One second. I believe someone is saying in the chat that they cannot hear. So I just wanted to ensure everyone can hear. Can you please put a message if you can hear, at least some of you? So we're sure we can hear you. Okay. I can hear. Okay, fantastic.
Okay, thank you. Thank you, Prakash, once again. And thank you for all the attendees who have joined for today's webinar. This is an educational webinar. We have 30 minutes to discuss about some of the latest tax planning strategies and few updates from IRS. And the next 30 minutes, after the presentation, we are going to open the floor for question and answer. To begin with, I want to just to show our team, myself, Gangaraj, I'm the founder of RightTaxMate. I started my career with Ernst & Young. After working for Ernst & Young in 2015, I started RightTaxMate. So now I have Arish and Krishnan has joined as a partner. So currently we are helping close to 4,000 tax returns in a year. Coming back to our little bit credential, we have 75 plus tax consultants, combination of CPAs, EAs, and tax associates. We do serve our client in all 52 states. Also, we have many clients are from India, UK, Singapore, who have US filing requirement. Our primary focus is US tax, and we do take care of all their US tax compliance for our client. Our physical location, our physical office is in KT, Sugarland, Cyprus, and Dallas are Irving. We do have our branch office. If any one of you would like to visit our office, we welcome them. You can see us face to face in one of our offices. Coming to technology, I'm from Ernst & Young. Garish Karkal is from Ernst & Young. When we started this practice, we made sure that no compromise on the technology or the security or confidentiality of our client. We use the top accounting firm software and also the security measures that we learned in our previous company, that is E&Y. We are adopting the similar level of technology or credentials for our clients. As I said, we nearly process 4,000 plus individual and business returns in a year. We do help our client on bookkeeping, accounting, audit, and other assurance services. Our value vision is simple. We want to be trusted partner in tax, bookkeeping, and accounting and payroll services. And everything we do, we want to maintain value for our client. So at beginning of the presentation, I just want to inform everybody that in the next 30 minutes, we are going to cover high-level information about strategies. This is purely for educational purpose. I don't want anybody to, before consulting the professional, I don't want anybody to adopt these strategies by yourself because there are chances that you may make mistake if you want to do it by yourself. As an icebreaker, before I actually get into the presentation, I just want to cover some of the frequently asked questions. I know many of you may have some of these questions. I'll try to cover as a rapid round. And then after 30 minutes after the presentation, if you want to know more about it, or if you have additional questions, feel free to reserve your questions or post it in the text message. We will answer them after this presentation. So number one, can I self-prepare my tax return? What should I do with the professional preparer? Yeah, if you have a simple W-2, nothing else, probably you may choose to do self-preparing the tax return, but most of them will have, properties in India, or you would have relocated from India to US. You may have a financial account in India, or you may need to explore your retirement opportunities, or you may have brokerage account, or you may have an intent to do some businesses to reduce your tax liability. So if you are in that position, we will talk about some of the strategies in the coming slide. You should get support from the tax professional. Always the chance of audit for a self-prepared return is much higher compared to the tax professional, because tax professional will ensure that they use the tax code in an appropriate way, and they will take the responsibility. IRS thinks that if the return is signed by a tax professional, so tax professional, you are relying with the tax professional, and you can be in a better position to answer any question asked by that IRS. That is number one. And most of the TurboTax, where you do your tax return, even though you take the audit assurance package or peace of mind package, is still be considered as a self-prepared return in the eyes of IRS. Even though you have all this protection, IRS still thinks that you are taking the decision. They only provide facilitate information, but you are taking the decision. Whereas if it is prepared by a tax professional, so tax professional is helping you, advising you to take a decision. There is a difference. And also the chances of audit is much lower when you get the tax return prepared by a tax professional. And how do I know, am I working with a good tax professional? We made a quick video to answer this question. Some of the important point you need to keep in mind is your tax professional should be well versed with all the complexities involved in your tax return. As I said, you are moving from India to here or some other countries, your tax professional should have the required knowledge or experience to take care of all the complexities involved in your tax return. And they should be available local. You should talk to them in person. Most of the time, some of the complexities can be easily resolvable when you talk to them in person, face to face. These days, because of technology, we can have Zoom meeting any point of the time. So your tax professional should be available to talk to you. If you're just dealing with the software, probably you may not get the solution or required information on time. Right. So when you're choosing the tax professional, it's important. One is the experience, the knowledge, availability, and you can meet them whenever you want, either virtually or face to face. So also the trust matters. If you talk to your friend who can refer, they have already gone through the experience. So a combination of these three you can use to choose a good tax professional. Again, we have a small video after this presentation. I'll share it with you. When you get a chance, you can go through it. I elaborated in detail how to choose a good tax professional. What services we provide? RightTaxMate, we want to provide a one-stop solution for all your tax, accounting, payroll needs. Be with the FBAR, or you want to get a gift from your parents in India, or you have a properties in India you want to sell, how to treat it, foreign tax credit, you want to start a business. So anything and everything. So anything and everything relates to tax, accounting, bookkeeping, payroll. RightTaxMate would be your one platform for all your tax needs. About our pricing, compared to our market or competitors, we are reasonable. But one thing you self-assured that before we start working on your return, you can provide your requirement, and we will provide that estimate in advance before we start working on the tax return, so that there is no surprises. Our fees completely depends on the effort and time required to complete your tax return. Approach us, take the quote, and you will know the price, and then you can start working with us. And also we'll try to make a package and share it with you for your easy reference. Prakash, we already shared. If you want to get some information, or if you are already Prakash client, you can get that information from them as well. How can I lower my tax liabilities next year?
Hey,
So
second, sorry to interrupt. The slide still shows FAQ.
correct. I'm going through all these FAQs in detail.
Okay.
I'm
Got
going
it.
one by one.
Okay.
If in the interest of time, I think I can quickly run through and then go to the strategies.
Yeah. No, sorry. I thought you have to.
Yeah, so how to lower my tax liability for next year? We have many other topics to cover. I'll not spend too much time. Then we'll get back to this when we are answering the question and answer. We will provide an answer for this. If we receive any letter from IRS, we will definitely help. What happens if there is any mistakes on the tax return? So as I mentioned earlier, being a tax professional, we do take the responsibility of fixing those errors. And am I personal informations are protected? Yes, we have been in this industry for 10 years, and we are adopting the similar technology or credential that a top accounting firm uses. So we do keep your information confidential. And I'm moving to the next question. Do you offer virtual or remote tax return preparation? Yes, we do offer. And if I miss the deadline, what will happen? So you can always file the return as soon as possible to minimize the interest and penalties. Sorry, I'm going fast to cover other things, but anybody have any further questions on any of these items, we will revisit and we can provide more detailed explanation at the end. Okay, coming back to the main presentation today, today's agenda, we are going to discuss about 2024 tax law changes. We are actually mid of 2024 tax return season. The due date is April 15th for personal, March 15th for business taxpayer. We are going to discuss about some of the interesting tax planning strategies. Arish will talk about India budget and then FBAR and FATCA. Coming to the, this is one of the hot topic and question asked by many of our client and prospect. Now the new government in place, what can we expect from the new government? One of the thing is there was a TCGA provision that was elected in 2019. There is a plan that they are going to make it permanent. As per the original plan, this TCGA provision set to expire in 2025. This will be made permanent, especially for business owner. They will have a lot of opportunities to reduce their tax liability. The tax table, this is something interesting chart. Many of you, when we look into the tax return, most of the taxpayer fall under 24 and 32 tax bracket. Tax planning is extremely important because if you help you to reduce your tax liability, and if you move from 32% to 24 or 32% to 22, that's where you see a maximum benefit on your tax return. Your marginal tax will be reduced and you will save about 14 to 12% in taxes on the marginal income. So this is just for your information. We can talk more about it later. Coming to some of the major tax law changes, and again, the reason we are bringing it up here is March 21st is the final deadline for filing beneficial owner information. We don't have much time. There are hefty penalties for not filing this beneficial owner information. If any one of you have a registered entity, limited liability company, or a S corporation, C corporation, or a partnership, you should file this beneficial owner information. And March 21st is the final deadline. Earlier, IRS given December 31st as the deadline, but later it was challenged in court. Finally, there was back and forth. Now, March 21st is the final deadline for all the entities which were registered before 31st of 2024. So now for the new entities, they must file within 90 days. But any of the existing entities that you have been filing it for in the prior year, please ensure you file beneficial owner information on or before March 21st. If you need any help in getting this done, beneficial owner information, please do contact us. We are happy to help you and take care of this compliance requirement. Now, tax planning strategies. We have hundreds, thousands of strategies that one can explore and evaluate and implement on the tax return. Some of the simple, basic, and most of the people, most of the taxpayer can easily use. Those strategies I have listed here. If you install or if you buy any energy efficient equipment at your home, be with your blinds, or if you change your AC motor or anything, or solar panel, anything which will improve the energy or energy efficient equipments at your home, based on the product, based on the equipment you have installed, you will get credit on your tax return. We do, as I mentioned, we do process 4,000 returns. Many of them, 90% of them, they miss this credit on their tax return. So we need to educate them and we help them to get this benefit on their tax return. So any of you in this group, if you have changed or if you have installed any energy equipment equipments at your home, your primary home or your rental home, please bring it to the tax professional. They will help you to claim credit up to $2,000 for some of the product. Some of them will be eligible for $1,200. This is significant. It will cover up all your tax professional fee and also gives you additional credit on your return. And if you buy an electric vehicle, depends on the kind of vehicle, you may get 7,500 credit. This also linked to the total income you have during the current year. If you want to know more about it, you will need to provide your income details and we will evaluate and let you know how much credit you can claim on your tax return. And some more, Roth IRA for kids. This is an effective and powerful strategy to build a tax-free, you can build that wealth, tax-free wealth for your kid. Again, there are some limitation in setting it up. Not everybody are eligible to contribute Roth IRA for their kid. There is a workaround. We need to create an earned income for the kid to make use of this strategy. Any income you generate from these Roth IRA is tax-free. You can keep aside a very strong wealth for your kids by adopting this strategy. Especially for business owner is easy. Even for individuals, there is a workaround. Contact us. We will explain in detail. We'll understand your position and then explain in details how can you make use of this strategy. HSA, health saving account. Again, the growth in the HSA is tax-free and you can use, keep aside decent amount of money for your medical expenses. This is also one of the popular strategy to grow your income tax-free. Otherwise, on the growth, you may end up paying 35% tax generally in other state, especially who are resident of California, you may pay 55 or 60% in taxes. So you can have a HSA and grow tax-free and reserve decent amount of money for your medical expenses. Same with the 529 plan. Everybody need education. Every child will have educational expenses. So you can accommodate or you can accumulate the small amount year by year and grow your 529 plan. The growth is tax-free. You can contribute, there is a limit on contribution, but if you want to do jumbo contribution, there are some workaround. We will give you all these loopholes or the ideas to contribute more towards the 529 plan to reserve good money for your child education. Another strategy is about ELAT, creating your own charitable foundation and then transferring the wealth to your kid. It it act as a twofold. One is you can reduce your tax liability today and also pass tax-free income to your next generation, to your kid. You can set up for 500K or 1 million, depends on your total income. This is one of the popular strategy these days. We can see whether you are fit for this strategy and use it when we are doing the tax return. Other one is reducing taxable income by contributing more towards 401k plan or defined benefit plan, and also there are deferred compensation plan. Most of you are familiar with 401k plan. 401k plan always have a yearly limit, but defined benefit plan or deferred compensation plan have much higher limit. So we will educate you and then help you to adopt this strategy on your return. Trader tax selection, especially this strategy can be implemented. Someone spend more time in the trading activity or day trading or pattern day trading. So you can set up this trading as your separate business and take a lot of expenses on the income you generate from the trading activities. Real estate professional status. This strategy can be implemented by someone who have rental properties or who manage Airbnb or who are willing to build their wealth in the real estate side. They can make use of this strategy. There is no passive activity loss limit. You can convert your passive loss to an active loss, and you can write off that active loss with your W2 income. This is one of the popular strategy. Many individuals have used this strategy and brought their marginal tax rate from 37% to 12%. So this is one of the most popular strategy. If anybody are in this situation, we will evaluate and help you to make use of this strategy. Cost segregation will help you to accelerate the depreciation. A combination of cost segregation and real estate may help you to reduce your taxable income. Kiddie tax planning. Kiddie tax, you can give a loan for your child and have them to invest in your business and pay an interest. It is multifold, and there is a process to be followed. You may save $1,300 to $2,000 in taxes. This is again one of the easiest strategy. You need to think about it well in advance. Plan for, probably you may not able to do it for 2024, but 2025, if you plan, you may able to reduce or take additional credit on your return. Again, invest in oil and gas or solar project will give you credit on your return. Opportunity zone is something for somebody who have capital gain. They can invest in the opportunity zone funds to minimize the capital gain tax on your return. So I know it is too much of information. I have quickly gone through on many of the strategy. There are much more. You can contact us after this presentation if you think you want to use any of them. We will be happy to spend more time and explain in detail. So with this, I will stop here and then I will hand over to Krishnan. He will have few points to share, and then Harish will discuss about India FBAR topics. Thank you.
Thanks, Gangaraju. Gangaraju has been in the tax business for over 12 years. He spoke to us as a tax professional. Now I'm going to share my viewpoints as a taxpayer. I'm like many of you. I've been filing taxes in US for the past 30 years. First 5 years, I did not even know about TurboTax. I was doing it manually by myself. Then next 22 years, I used TurboTax because I was so busy with my day job. I was working for a multinational company, big positions. Even though I was a chartered accountant, CPA myself, I took little interest or time in preparing my own tax return. So I relied on TurboTax. The last 2 years, I've been taking professional help. Until the last 25 years, my average tax was anywhere between 25,000 to 40,000. The last 2 years, my average tax rate tax return when taxes or tax rate is 15 to 22%. Before that, it was about 30%. So I think that's the difference between taking help from a tax professional or investment professional. The same example applied to my investment management. Before that, I don't want to trust anybody. I was managing all my investments in India here by myself. So then when I started taking investment professional helps, it made a big difference. Plus also now I can focus on my core capabilities versus worrying about the taxes or investment. So I want to take this opportunity. In fact, now I am working closely with both Prakash and Gangaraju, both as a business partner as well as the customer. Thanks to both of them. And then now I will in fact pass it on to my colleague Harish, who will talk about India taxes. Thank you.
Thank you, Krishna. Harish,
Thank
over
you.
to you.
Thank you, Krishna. Can you hear me, Gangaraj?
Yes,
Yes.
Harish.
Hi, good morning, everyone. This is Harish Karkal, a chartered accountant and an enrolled agent, having 360-degree view on both US and tax implication of individual and business tax filers. We understand that having multiple geography taxation could be very complex, and also having the dual taxation in the country of source and the country of residence could add more fuel to the fire. So it's important to have a visibility from both the sides so that we can always leverage on the tax saving opportunities. So I'm here with the quick updates on the recent tax law changes, part of the Finance Bill 2025. And this was presented on 1st of Feb. However, this is applicable from 1st of April 2025. So it's for the 25-26 tax year. So there has been a lot of changes being done in the income tax segment to make the income tax filing simple and easy to understand with the new tax regime of being introduced. So the biggest change is there has been a drastic change in the slab rate. So earlier, the 30% slab would kick in the moment you have an income above 15 lakhs, now which has been increased to 24 lakhs. So the exemption limit has been increased to 4 lakhs, and at each interval of 4 lakhs, the tax rate gets added 5%. So 4 to 8 lakh, 5%, 8 to 12 lakhs, 10%, 12 to 16 lakh, 15%, so on, right? So once you touch 24 lakhs, India, basically the taxable income on the India tax return, you start the 30% bracket. The other major updates that's happening here is if you have rented out your property, commercial property, and if the tenants are doing the tax deduction at source, that is TDS on rent. Earlier, this limit was 2,40,000 rupees per year, which has been increased to 6 lakh per year. So which is a big relief that some of the rent do not get to the TDS limit. However, if the tenant is aware you are a non-resident of India, they might do a TDS at a higher rate under Section 195. However, most of the people do a TDS on the regular tax rate. Fees for professional payment, earlier the limit was 30,000, increased to 50,000. If you are earning income through like dividend income or mutual fund income, those limits have been increased to 10,000, meaning if your income is below 10,000, there will not be any tax deduction at source. So these are some of the major changes on the tax deduction at source. However, the hot topic is the remittance outside of India. So earlier, there was not much of a restriction. Now, whenever you want to transfer any money from India bank account, the bank will come up and say, hey, you have 20% tax collection at source, right? So most frequently asked question is there any limit up to which I can remit out of India without any tax collection at source? This limit was earlier 7 lakh rupees. However, from 1st of April, it's going to be 10 lakh rupees. So up to 10 lakh rupees, one can remit out of India, and there will not be tax collection at source. However, if you intend to transfer more than 10 lakhs rupees, then bank will hold 20% tax collection at source and remit that TCS to your PAN account. So you need to file a tax return. If there are no tax liability for you, you can claim it back as a refund. However, there are certain exceptions where TCS does not apply. Let's say you are selling a rental property or a house and you're already paying a capital gain tax in India, and then you are remitting the money, then the additional TCS will not apply. However, you require to furnish the certificate from Chartered Accountant in 15 CA-CB. Only then you could get the exemption, right? So another bigger change, I think the drastic change that happened is the long-term capital gain from sale of assets, especially the house property. So earlier we had this concept of indexation. However, this indexation benefit has been completely removed for non-resident filers. So now without any indexation, you have to compute your long-term capital gain. But the good news is the tax rate has been reduced to 12.5%. Whereas it was 20% earlier. So there are certain planning opportunity available. If you want to, plan the sale in a way you can still get the indexation benefit, and you could plan around saving your net investment income tax, your state income tax. You could schedule a consultation with us. We can assist you in planning around these strategies for you. Another bigger change is, India earlier there were no possibility of going back and filing the prior year returns, but now they have given an option of filing updated tax return. Now we can go back up to 4 years and file missed tax return, but the only condition is that there has to be a tax payable on the return. Only then you can file the backdated returns. However, there will be additional taxes to be paid. For the first previous year, the penalty or the additional tax will be 25%, and then it goes to 50, 60, 70, so forth. So it comes with a cost. So any questions on India tax related, you could connect with us. We can help. So we'll move on to the very old topic, but a very important topic, that is FBAR and FATCA. So foreign bank account reporting, a lot of people are aware of it, but is it serious? Do I really need to file? We are here to give you the background about it, right? So this is introduced back in 1970 for individuals and business who have, the balances, especially for FBAR, the maximum value during the year in non-US financial account. As financial account does not mean only bank account. All the financial assets will be included. If at all it exceeded $10,000 any time during the year, you will trigger a FBAR filing requirement. So the due date to file this form is 15th April, FinCEN 114. However, IRS gives you automatic 6 months extension, so you get until 15th of October, right? So if you have missed filing FBAR for a couple of years, you have missed reporting income from the foreign bank accounts, then IRS has given opportunity for you to get it correct by participating in the disclosure voluntary disclosure program, and you could contact us. We can assist you with filing all those returns, FBAR forms, and make you current with IRS. The reason why we are stressing so much on this is, if IRS figures out that you have willfully violated and not filed the FBAR form, they could charge you greater of $100,000 or 50% of the balance in the account for each year of the violation, right? This is huge. If you prove that it was a non-willful violation, then it could be $10,000 per violation. However, it is hard to prove if you're present in the US. Okay. The flip side, I mean, the FBAR forms goes to the Department of Treasury, and it doesn't really go with Form 1040. However, FATCA form, which is 8938, it goes with the 1040 to the IRS. The information is pretty much similar in both the forms. However, they differ in terms of the filing threshold. So as you can see in the slide, the limit for the FATCA is pretty high compared to FBAR. So there is a separate limit for those living in the US or living outside the US, those who file as a single or married filing separate, married filing joint. So you can see almost the limits are double, right? So you may have a filing requirement for FBAR or you may not have for FATCA. So it could be possible. The violation is up to $10,000 and additional penalty up to $50,000 for continued failure to file. So 40% of penalty or understatement of income. So both are very sensitive, and the information that you report are the very basic things like the maximum value, account number, the address, that's it. But the implication of not filing would be very high. There are some of the myths that's going around saying that, oh, I was not aware. Is this a new law? Absolutely not. It's been in effect from 1970, as back as 55 years now. So I've not filed for these years. Am I in soup now? No, you can still be part of the voluntary disclosure program, and then you can get current with IRS. I filed my tax extension. FBAR is automatically extended. Yes, you get time till October 15 to file your FBAR. So, and there's, a lot of people say, oh, I will not easily get caught because I never filed FBAR. Is it okay? Answer is no, because you can still be caught. Because, there are different ways. Like when you enter into US, the intergovernmental agreement, like FATCA agreement that across US has with many countries, renewal of your passport, visa, green card, ownership of your US assets at the time of death, and there could be whistleblowers. Someone can say, hey, this person has huge wealth outside the United States. Can I be criminally prosecuted? Yes, IRS can. He has the absolute right to intimate a criminal investigation. So it's important you pay attention to it. If you're not compliant, please take help from the tax professional to get it correct. Yep. Over to you, Venkat.
Thank you, Harish, for detailed presentation on FBAR and India taxes. So now we are displaying our contact information on the slide. We will try to answer questions. If you have anyone, you can ask. Prakash, what's the plan? Will you allow them to speak?
If the people on the call, if you want to take a picture of this, please feel free to do so.
Yeah.
Our website is RightTaxMate.com. Phone number, we can email. Please feel free to take a picture of this one if you want to contact us back. Thank you.
Yeah, please do mention, InvestMates. We have a special arrangement and agreement between InvestMates and RightTaxMate, so you get a discounted pricing. So anyone who has now questions, please, you can post it in the Q&A section. I already see few questions being asked. So Gangaraju, you could pick that up. And if someone is willing to talk rather than ask in the Q&A section, please raise your hand. I believe there is an option for attendees to raise your hand. Then I will make them talk. I can allow them to talk, and you can either come on video and ask, or you can ask in Q&A section, or even in chat or audio. However you want to ask, raise your hands and we will enable you to ask your question.
There are some questions already posted. Let me start answering them. First question is from Sridhar. Question is, does investing in oil and gas give immediate deduction for 2024? The deadline, most of the oil and gas project have a deadline of 31st of December 2024 for the year 24. Now the deadline has expired. There are a couple of them who are on accrual basis of accounting. They do, but it is not something safe. I know a couple of them market that we still help you to apply for 2024, but from the IRS definition, it is not a safe to take the risk. At least you can, if you have any plan, you can plan for 2025. 24, it's already over. The due date are expired. If you want to, if you have invested, you have to have done it before 31st of December.
Yeah, the oil and natural gas, I think, yes, you get a deduction, but I think you have to select the right oil and gas investment. We can refer you to the right professionals we have tested and worked with in the past.
Right. And the next question, if you want to take your professional lab, how can we contact? We already shared our contact information. Easiest way to reach us is sending an email tax@righttaxmate.com, or you can visit our website, righttaxmate.com, and submit for appointment. I'll move to the next question. Can you provide contact details for filing FBAR? Yes, the same contact details, tax@righttaxmate.com. You can send an email. We will onboard you. We do have a secure client portal. We currently not helping only for FBAR. We are providing our primary services, tax return preparation, and then we take care of that FBAR. We want you to get your tax return completed, and then we file for an FBAR. Even though it's a separate filing, we prefer to do it tax return and FBAR. If you want to just to do an FBAR, I don't, we may not able to provide justice. So if you are okay to get the tax return done and then filing an FBAR, we're happy to do so. So you already have our contact details. You can reach out to us. The next question is it necessary to convert resident saving to NRI NRO account, and it is our requirement to provide SSN info to an Indian bank as part of FATCA requirement? There are two countries involved here. One is India, India and US. From the US, from the IRS point of view, there is no necessary. If you are looking from the IRS side, US side, there it is not necessary to convert. But from the India side, things are changing. The banks are forcing you to change. You may require to convert based on your status. You may need to require to change to NRE to NRO or vice versa, depends on your actual situation. And FATCA is something the bank is required to collect SSN number. Earlier, there used to be an option to not to provide an SSN number, but these days they are as part of the requirement, they are collecting the SSN number. You may need to provide that information. Because it is coming from India, and then they do have, otherwise they may not allow you to keep that account open. You may need to find another bank who are okay to open the bank account without a SSN number. But once you meet the threshold, they will again come back and ask you to share that SSN number. Okay, the next question again from Sridhar. FATCA or FBAR, if we missed filing, so do we need to pay penalty if person is USA for last 11 years? As Harish has mentioned, if you have not filed FBAR or FATCA, you may need to, you have a couple of options. Depends on your situation. Is it a willful, non-willful, or does it have any material impact on your tax return? Based on the circumstances or based on your actual fact, we will suggest you what direction to move forward. One of the option could be participating in the voluntary disclosure program to miss or to avoid the penalty, hefty penalties. But even voluntary disclosure program comes with a nominal penalty. Please do contact us. We will review your situation and then suggest you, give you an estimate or inform you what would be the penalty, or if there is a penalty, we will let you know in advance. Okay, next question. Currently, I'm using TurboTax to file my taxes. It is very convenient because it allows me to import all my tax statement directly from bank account, brokerage account. I don't have manual download and share them. How does it work at your end? Is there any similar portal available to auto import tax statement from all my accounts? Yes, we do have a secure portal. Now, most of this TurboTax, you do give your permission to download all that information directly from your brokerage account to TurboTax. Similarly, we do have that option, but we need to create an account and send that permission. Sometimes we need to work together to download some of that information. So you can connect your bank accounts to us, to our portal. I think Prakash can discuss more about it. He has that platform. I think he can answer better than us. So if you work with Prakash, that is what he is building, a kind of platform to automatically download all this information and passing on to us. Let me pause here and then have Prakash to talk about it. So he's the right person to provide answer for this.
Yeah, thanks, Raju. Yes, like TurboTax, there are other platforms and portals which RightTaxMate uses. It's a one-time account setup, as Gangaraju said. That is what they have been using all along. But what we are also trying to do as one of the benefit that we want to provide to customers of InvestMates is when they already are tracking their bank accounts, investment accounts, all in one place. All your capital gains, your dividends, your other income or interests, all of that gets tracked separately in our platform, and it'll be easy, whether you connect brokerage 1, 2, 3, or many other platforms. Everything is in one place, so it's easy to generate those tax reports. And what we are launching very soon is, you can see all of this, not just, but also push it to the portal, what Gangaraju is referring to, so that the entire process is automated. And when that is automated, the whole effort of tax people preparing and doing all of that will be minimized. And hence, we want to also have the cost very competitive than TurboTax or any other platforms, right? So that's our goal. You will hear more from us. If you have questions on, hey, how do I take advantage of InvestMates platform to connect my accounts, or track all my income, tax plan for taxes, I can send a separate detail or set up a separate session, even sharing demo of the product and platform.
Yes,
But
we will definitely address of making it more convenient. That will be easily taken care of. In addition to that, another direction or angle you may need to think about it, as I mentioned earlier, TurboTax may not be the solution for all your tax filing needs. It may not be efficient enough to address all the complexities involved. Some of them have missed filing an FBAR because they are not aware about it. So the cost of not filing an FBAR is significant. Likewise, I mentioned about 15 or 18 strategies in the early of my presentation. You may miss some of the strategies, and each strategy may potentially have a saving of $500 to $5,000 in savings. Filing in TurboTax, you would have missed all those strategies. Like Krishnan has mentioned, when he was working for a corporate job and when he was using the TurboTax, his tax liability was high. So it is multi-angle. You may need to think. Convenient, it can be done. We do have enough tools, kind of confidential. We can keep your information confidential. You are working with a professional who have been in this industry for 20 plus years. But at the same time, you should also consider the other benefits you have for getting your tax return done with the professionals.
Yeah, one of our new clients shared when they were trying to use TurboTax for calculating the capital gains in India for the property they sold. It was giving a very huge tax liability, as high as $40,000, right? So that's one of the examples. So whereas a professional can look at it more objectively.
Yeah, and another thing is whenever you do TurboTax, it asks you to click a button, but behind the button, it comes with 10 pages of terms and condition. So you need to be going through the terms and condition, understand, and then decide, I agree, or I'm okay with that. So clicking a button, you most of the time you're doing it without knowing what you are getting involved. So that's something you may need to consider. And as I said earlier at the beginning of this presentation, if you just have one W2, nothing else, you don't have any other income, probably TurboTax, because you're not exploring or any other complexities involved. You may do it in TurboTax. But the moment you have your brokerage account, the moment you have family, the moment you are planning to save taxes for your retirement, and you have assets in India, you have properties in here, rental properties, TurboTax is not the right platform to get your tax return done.
More importantly, I want to emphasize one point. Working with a different tax professional in India for some of your assets or incomes or interest or anything in India, plus working with a professional here, or even if you don't work with a professional, you use a platform like TurboTax, right? You don't get to take advantage and be compliant of all the policies and rules that you have in both the countries, and that's the complexity we as NRIs have. And moreover, you miss out on all those strategies and saving. And our plan is to educate people on those strategies. What we miss out generally is, hey, TurboTax is the cheapest, and then it gives me $60, $70 or $100. But if you are ready to spend another $50, $100 with a professional, you can save many thousands. So people are not ready to spend an extra $100 to save thousands, right? So that's a big blunder and mistake that many NRIs do. And I encourage everyone to take advantage, follow those strategies which we spoke. And another big revelation is what Gangaraju shared here in this meeting was just 11 or 16 strategies. But if you actually go and find out, there are 1,600 tax strategies that are available.
Correct.
Okay, and they have just shared it very minimal, but there are so many cases that you can go and look at hundreds of strategies which are legally allowed. It's just that you need to work with a professional like Krishnan. He's a CPA. He lives in Seattle. He has tremendous experience, and they can talk about more of these strategies which are unique to you, how you can take advantage of.
Yeah. On the lighter side, few years ago, our President Trump's tax return was published. He had $300 million revenue, and he paid only $300 tax. All are legal, all are tax strategies.
Yeah, and just to add one other important point here, most of the taxpayer, when we are doing the tax return, they come to us in the month of March or April, just before filing the return, and they want to save the taxes. But unfortunately, most of the strategies may not be available to use if you come to us just before filing the return.
Correct.
You should be in touch with your tax professional throughout the year, especially before most of these strategies will expire 31st of December for the current year.
And then there are like the oil and gas strategies. There are only few genuine good funds with the good strategies and good returns are available. And then all the people, smart people, pick it up within 1 month from the fund opening.
Yeah.
So if you wait till the end of December, then you will be left out with the funds that will give you tax savings, but the return may not be that high. But if you want both the return as well as the tax savings, be an early adopter. Start the planning in March, April. Yeah,
that's true. That's true. And also you need time to think about it. We will tell you invest 100K, you get tax write-off, but you need to choose the right, the fund or the right investment. So it takes time. You are not just trying to get your tax reduction. We are also trying to get better investment. It's a combination of both. So you should, if you are looking for implementing all these strategies, you should contact us sometime in May. May would be the right time.
Not early, it will be a win-win.
Yeah, May is the perfect time. April 15th has just completed. Your tax professional give enough time explaining it to you, creating a scenario, and clearly inform you, if you invest this much, this would be your tax savings. right? They can factor your income, prepare estimated return for 2025. If there is any change, you can always switch the gear. Either you can decrease your investment or increase. All of them can be made. Decision can be made in October, but you need to be aware about all your options in the month of May. May, June is the right time to start the process.
So we see some more questions in the Q&A. In case we are not able to answer, please feel free to contact us through email, set up a phone call. I believe the first consultation is free, right? 30 minutes consultation is free. We can even provide some advice, inputs on wherever we can. Yeah.
Right. I don't
Yeah,
know how much time we have, Prakash. We already crossed.
if people are,
time.
we can spend another 5 minutes answering these
Okay.
2-3 questions. I'm okay to extend the session by another 5 minutes since we started late.
Yeah.
But just to put the message, whatever you said in the last few minutes in a different way, tax planning or tax strategies are not after the fact while you're filing the taxes. It has to be done before the fact when you're planning for the current year. So that's the message Gangaraju was giving. By March or April, you're trying to save taxes. The time is already like too late for the previous year. So during the year, you plan it so that when you actually file it the following year, you can take advantage of it because you have planned and structured all of that in a better way to save taxes. So that's the message here. But with that, I will let Gangaraju and Tim answer the questions in the Q&A section.
Yeah. Next question. Is it possible to get tax deduction for medical expenses spent on parents in India? Sorry. Yeah, for individuals, it is not, IRS will not give that as a deductible expenses on the return. But for business or any individuals who wants to willing to start a new business, again, there are workaround. We can give you some attractive business ideas. You can be the business owner with your the day-to-day working. You can start a business, take the tax benefit, and also take care of supporting your parents. So we can discuss more about it. Set up a time. We can give you that workaround and try to help you to reduce your tax liability. But if you go in generic definition of IRS, these expenses are not deductible on your return. Okay, I think Prakash, you stop me. I'll keep answering that question whenever the time ends. Please stop me. We will conclude this presentation. Okay, let me answer. I think FBAR. Follow up to my previous question. Can I close my resident saving account from Bank A and move all my money to an existing NRI account in Bank B without causing any tax event? Yeah, in India, transferring fund from one bank account to another bank account will not trigger any taxable event, even in US. We are talking about disclosing on FBAR. When you move money from one bank account to other bank account, you may still need to disclose both the bank account on the FBAR. And FBAR is not a tax form. You don't pay $1 of tax on FBAR. You have 1 million, 10 million, or $10,000. You don't pay $1 of tax on the return. The expectation from IRS is you need to disclose the maximum balance on your return. And in case if you make any interest income or any income, only on that interest income you need to pay the taxes. So transferring or maintaining a fund in India, you are not required to pay tax. It will not trigger any taxable event. Hope I answered your question. If you need further assistance, please reach out to us.
Yeah. So Gangaraj, I answered some of the questions. The last question is how confidential and secure our systems are to share tax documents. I think you already answered it, but you can re-emphasize.
Yeah, I can share my client portal, and also we have taken all the necessary certification in the client portal. When you access it, you will find it. If you still need a specific explanation, I can introduce to our IT expert. He's here in the US. He can provide you answer on all the security certificate that we have. And for your information. So when you log into our portal, you will know what kind of security we have. We have multi-factor authentication. You can easily navigate the information and upload in our portal So please go through the portal and then contact us in case if you need any further explanation. I will happy to connect my IT manager and he can explain it to you. And we are also taking SOC 2 compliance. That is another one we are working on, just to ensure that we are.
So the another question is there any investment advisory for stock selling and timing during the year? We don't provide investment advisory, but however, we do have a partner firm. We can give referral. They provide advice on the.
I'll take that answer. Within InvestMates, we also have internal investment advisory and finance planning. So you can install the InvestMates app. There is a section to go and look advisory, and within advisory, you can book your investment planning or investment advice session with our expert. So you can do that. I will also share that in the email.
So you do have, Prakash, both the pretty much the platform option as well as the additional premium option.
Yes. Human expert investment advisor with 30 years experience. We have them on the back. So they'll help you, whether it is in India or US, it doesn't matter. See, that's one of the things that we wanted to ensure that there has to be a single platform for your investments, taxes, and everything else, and you talk to a single person. So the advantage again with RightTaxMate is you don't have to talk to two different individuals or teams or companies. By talking to one team, like RightTaxMate team, you get to take advantage of both India and US taxation and any cross-border compliances.
So for those in the call, in fact, I had an opportunity to go through some of the InvestMates options. In fact, I was working with investment professionals in the past. InvestMates will provide the same kind of services for the fraction of the cost you will pay to the investment professional. So please take advantage of it.
Yeah, I've also posted a poll. If you can take a minute while other questions are being answered, it'll help us. Please go ahead.
I think all the questions have been answered, Prakash. Whatever I asked. If I miss something, please ping me. I'm sorry, I'm going one by one. It looks like all those questions have been answered.
So I think that we want to thank Sridhar who provided input. Sridhar said, I just checked InvestMates app is pretty good. One-stop shop for everything. Thanks for the compliment.
Yeah, thank you, Sridhar. And please do take a moment to answer the poll. And if you would like to, I will also post another simple question. Would you like to learn more about tax planning saving strategies in the future? Or if you wanted more detailed session on India taxation, we can plan. So we want to hear from you what you wanted in the future sessions, and we are happy to organize one for you, because this is a very broad topic. Think of this as just a starting point.
Or within the taxation also, if they want to learn about any topics, we are happy to do it in the future.
Yeah, and then please ping in chat session that if you want a deep dive on any specific areas in the future, we are happy to consider a webinar or a session exclusively for the topic. So feel free to share those as well.
Sure.
Yeah, we squeezed too many topics in 30 minutes or 45 minutes. I don't know how much we were, we have paid enough explanation for you to understand, and some of them are complex concepts.
Again, on a personal note also, please feel free to connect with any one of us, Prakash, Gangaraju, me in LinkedIn, because now LinkedIn is the great medium. We are happy to chat, help you.
Yep. Okay, good. Thank you. Thank you, everyone. Thank you, Prakash.
Thanks.
Okay, great. I hope this was helpful for many of you, and we will do more of these sessions. Look forward for your feedback. Thank you for taking time. And please do reach out to RightTaxMate or me or InvestMates. Happy to help in any of these areas. Have a great weekend. Thank you all. Bye.
Thanks
Thank
all.
you.
Have a wonderful weekend. Take care. Bye.